This will be a daily outlook for Tuesday, July 28th. All right, we can see that yesterday, Monday, delivered as a classic sell profile, and to me, pretty significant what it did. Right, you can see that it obviously gapped up from the closure of the previous weekly close, and from that gap up, right, instead of first trading lower, it has traded higher first. Okay, and you can see that the market ended up finding a high of day inside, right, the suspension block. We had analyzed this range coming inside of the week, and right, we're anticipating for price to create high resistance if it were to trade into it in the case of a continuation lower, right? Opposite would have been if the market would have reversed from here. I would have needed to see a lower resistance price delivery towards the previous weekly high. Okay, but the market so far has proved that it wants to continue lower. In my opinion, the low-hanging fruit drawn liquidity for the week remains the monthly BISI high. From there, we'll see, right? Because if the market will trade into that level, obviously anything could end up happening midweek, right? Especially with FOMC, with all the tech earnings that the market will have Wednesday and Thursday after the close, right? There could always be a reversal scenario that happens or a continuation. But meanwhile, I do anticipate for tomorrow that the market should continue seeking discounted prices, right? Discounted liquidity. In this case, discount inefficiency. And we'll look at the lower time frame invalidation for this idea. Okay, so in terms of a sell side drawn liquidity, right? So discount drawn liquidity, the monthly BISI high, right, and somewhere right the upper half, say, of the monthly fair value gap. You know, if you can use the range, say, from 27,850 down to 27,600. Okay, all depending on what the profile will be, right? If it's going to be an expansion profile, then can likely trade for these levels. If not, right, that's why I'm saying a low-hanging fruit to be the high of the monthly fair value gap. And in terms of a premium array, well, not premium array, but a premium target, right, in case you're able to identify an open, low, high, close profile, that would be, in my opinion, the new week opening gap, right? That should provide sensitivity to price. And if the market will trade past that, then I do believe that if it won't reach for the previous daily high, right, then it should trade up to at least 50, right, 50% of the previous daily wick, 75% of it, right, all depending on how it's going to trade in discount, right? Does it trade at 50% of the wick, reject? If that's the case, then that's when I would have a higher target, a more premium target, say such as 50% of the previous daily high, if not the previous daily high itself, to trade a bit higher inside of the suspension block. If not, if the market will do this, then in that case I would simply target the new week opening gap. Okay, but if not, I would anticipate for the market to create, or at least to provide, an open high low close opportunity to trade towards discounted levels. If we look at the 4-hour chart here, well, we can see the weekly open, right, which is pretty significant. We have a large gap up. The market trades higher above the high of Friday and eventually ends up displacing the range here, right? We had identified here the rejection block, which was the weekly low from 2 weeks ago, right? So from Friday, July 17th, to provide either a phase of right, probably a phase of reaccumulation or distribution, all depending on your anticipation of price action here. In this case, the market has provided, because of the open high low close profile, as an area for price to distribute. Okay, if we're to look on the lower time frames, you can see that in New York, right, so phase of distribution, the market uses these levels, right, to distribute prices lower, such as it did in the Asia session, right, on this lower time frame market maker buy model, as a phase of reaccumulation. Okay, so this is why these levels are important to have on your chart and to review going inside of New York. Same thing can be said for the discounted levels, right? In terms of discount levels, I had said that I will want to see how all of these weekly fair value gaps inside of the range are traded. And these from a lower time frame perspective can help you identify reversal profiles, or can be drawn liquidity for right, in terms of a continuation, right? The right side of the curve here being a sell profile, right? So if you're short, you ideally want to be buying back inside of these weekly inefficiencies, and you can see that, right, these levels are already starting to prove that they're sensitive. Previous daily low created at 50% of right, a discount weekly inefficiency. And so again, like we just said on the daily chart, we'll look at this better on a 3-day look back perspective, but right, the market has found sensitivity here, so if it will trade again here and reject, then all depending on the time of day, the earlier it does it, if that's what it's going to do, then the higher of a premium target I will have. In this case, I will probably want to target again. We had said 50%, right, to the essentially the upper half here of yesterday's premium rejection block. On the 4-hour chart, this looks like here we have a large fair value gap in the range. Essentially back to these levels, right? Back to the levels of the discount rejection block. I would want to see the market trade back in this range if early on in the day we'll find a rejection. If not, if the market will want to trade lower to then trade higher, then in that case I would simply be content with targeting the new week opening gap. If not, right, as I said, my preferred scenario for today would be a continuation lower. Okay, so for the market to first trade higher, create high resistance inside of the range, and then continue towards what is, in my opinion, the low-hanging fruit drawn liquidity for the week, being the monthly fair value gap high. From a 3-day look back perspective, right here we can see the discounted weekly fair value gaps as we just saw on the 4-hour, right? But as you can see on the 1-hour also, you can see that these levels are proving to be very sensitive. Okay, so these are levels, in my opinion, that you want to be keeping on your chart, as right, as we had analyzed on the coming inside of the week, that say below the 3-day look back, or even below the right, or at least in the discounted portion of the 3-week look back, we had no discount arrays, right? So in that case, that's when you need to identify the discount arrays from the 3-month look back. Right, and if the 3-month look back discount levels are not available, in that case you would need to use, say, a 3 quarters back, three quarterly look back. All right, so we can analyze the phase of price delivery inside of this range. See that the market comes from a classic sell. Eventually, on Friday, the market delivered as a range to expansion, right? So expansion, consolidation, expansion. And yesterday at the weekly open, we had a gap up, right? Market keeps on trading higher from the open. Obviously, this is not a bullish scenario, right? If the market would have gapped up but then first started to trade lower, that would have been much more bullish in my opinion. So the market ends up trading above the high of Friday, and eventually from there distributes lower. Right, so we have expansion, consolidation, expansion, retracement, right, turtle soup, down to expansion again. Okay, so very likely I would anticipate for today to be a continuation, if not a consolidation profile. I find that because of the time of week, right, it's going to be the day before FOMC, the day before all the tech earnings. I wouldn't anticipate for Tuesday to be the one that reverses the range if that's what the market will do this week. Okay, I would ideally like to see that happen on either Wednesday or Thursday if that's what's going to happen. That's why I'm saying that I would prefer seeing a retracement to continuation, or overall a consolidation profile. All right, so we can analyze what's located inside of the range here. Now, the previous daily range here, right, it left us two large fair value gaps, right? So this fair value gap essentially comes at 75% of the range. At 50% where we have the new week opening gap, and then at 25% down to the lows, we have here this large rejection block, which is the one that created the low of day after trading inside 50% of a discount weekly inefficiency. So, personally, I prefer this level here. I think that this level, which is the new week opening gap, should tell me everything about the order flow. If I'm going to come inside the New York session and New York is already trading higher, then in that case, right, then we need to identify what's located in premium of the 3-day look back, and in my opinion, it will be the same level that we had here, right? If you look at the 3-day look back range, right, the previous daily high here is at around 50%, right, and then above, say at 75%, we still have that 4-hour fair value gap that price has currently left as a breakaway. Okay, so in case today of a reversal idea again for me would need to be displacement and for the market to reclaim the new week opening gap. Right, we need to see displacement, reclaim, and then expand towards a premium level. If not, if this level, right, if the new week opening gap will still be proved to offer resistance, so as an inversion level, in that case my drawn liquidity for the day will be, as we talked about, the monthly BISI, the monthly fair value gap, which comes in at around 27,850, 27,825. Right, so we'd be looking essentially here at the lower half of this weekly discount inefficiency. Okay, it happens to be this fair value gap inside of the range. Okay, so not that much to cover today. I think that is pretty clear, right? The ranges are pretty clear. Our levels are proven to be respected. So I'll just do a quick recap. We saw yesterday, Monday, gapping up, right? So Sunday open, gap up. But as we said, the market, instead of trading lower first, right, has decided to trade higher, which obviously is not ideal when looking for either a reversal profile, but all depending on the context, right? In this case, the context is that price comes from bearish order flow. And so the market ends up trading above the high of Friday. Inside here, the suspension block, the order block, the rejection block, are a lot of PD rays located inside of this range. Overall, right, you can see respecting the levels of the weekly BISI located at 25% of the 3-week look back. So because the market has delivered as a classic sell and trading higher first, I do believe that the drawn liquidity for the day, or at least the low-hanging fruit drawn liquidity, should be the upper portion of the monthly fair value gap. This range aligns with standard deviations. But if the market, right, so this is obviously a discount drawn liquidity. If the market will end up either rejecting inside of the discount rejection block left by the previous daily range, or trade at below the previous daily low, right, and end up finding a rejection, then I do believe that the drawn liquidity for the day should be the new week opening gap. And if the market will trade past that, personally, I would target the range around 50% of the previous daily rejection block. Okay, I wouldn't have such of an extended target because the order flow here remains bearish. On the 4-hour chart, basically the same picture, right? We saw that the market traded inside of a discounted inefficiency, created the low of day at 50% of it. The market comes from an expansion. Okay, so because of all these reasons, I do anticipate for the market to continue trading lower. Ideally, I would be interested for the market to first trade higher before it trades lower. And again, in terms of drawn liquidity, I think low-hanging fruit drawn liquidity for today's daily profile can be the range around 27,800 down to 27,700. If the market will trade past those levels, then I'll start being interested right at this range, the range around 27,300 down to 27,150, say. Obviously, this is a bit overextended for today. Everything could happen, right? If today will be a classic sell, right, from the open or near the open, and it could have the juice to distribute, right, a 3,000, 4,000 tick daily range, and in that case, I would want to target this level. And vice versa, right? As we said on the daily, if the market will trade and discount and end up finding a rejection, then I would like for the market to trade back towards the range of the new week opening gap, and from there seeing the reaction, right? Because those should be pretty sensitive levels, right? So all depending on the anticipated profile of day, you're gonna want to make a decision in the moment, right, as to, or at least wait and see the reaction at these levels, right? Is there displacement and price reclaims the NWOG, or does price create high resistance inside of this range to continue trading lower? Okay, and based on that, right, your drawn liquidity, in my opinion, should be, as we just talked about, right, the lower half here of this discount weekly BISI. If not, if the market were to trade past the new week opening gap, right, essentially there's this big portion here of there's a large 4-hour fair value gap cuts through the wick, and this happens to be here near the range of well, happens to be inside the premium rejection block created on the daily chart by the previous daily range. Okay, and on the 3-day look back perspective, we analyzed the phase of price delivery. We saw that price comes from expansion, consolidation, expansion, retracement, expansion. Okay, so order flow remains bearish, and we analyzed also the previous daily range here, and we saw that right at 50% of the previous daily range, where you can find the new week opening gap. In discount, right, the discounted portion of the previous daily range, you'll find here the rejection block. But in this case, I won't be putting up its level since it already happens to cut through the high down to 50% here of the discount weekly inefficiency. Okay, so that's the reason why I'm only leaving the levels of the new week opening gap inside of the range. These levels should actually remain important for the remaining of the week. Okay, if price were to revisit these levels, should offer good trading opportunities in my opinion, and price should be sensitive to these quadrants. Right, so if the market will trade here and reject, then again, drawn liquidity and discount, I'm looking at the range of the lower half here of this discount inefficiency. If the market will end up trading higher, right, say trade, right, you come inside New York, the market is already trading above the new week opening gap, then I would like for the market to target probably the closure here of this large hourly fair value gap, and then from there you can potentially look at the previous daily high. But again, if that will be the drawn liquidity, I would need to see the market create a low of day early on in the day. Okay, the lower this goes, in my opinion, the less juice it will have to reverse and to have a drawn liquidity being the previous daily high, or the premium array located inside of the 3-day look back being the 4-hour inefficiency that is currently a breakaway gap. All right, I think that covers it for today. Good luck and good trading.